Welcome to the deep dive. Today, we're going to be looking at Nebius, NBIS, as it's known on the market.
Yeah.
This AI infrastructure company is really making waves, and we're here to break down the potential for you, our target investor.
And we've got some pretty interesting sources this time around,
All right.
including a detailed analysis we found on Reddit from a seasoned investor.
Oh, very cool. So Nebius has a unique origin story.
It does.
It was carved out of Yandex,
Yeah,
a Russian tech giant,
that's right.
and now operates as a European company with U.S. operations.
Yep. And
Right.
that whole transition was prompted by, geopolitical events and the resulting sanctions.
Right.
But even with that kind of complex shift, they still managed to secure a strategic partnership with NVIDIA.
So NVIDIA, the chip giant, having a stake in Nebius is a big deal.
Huge.
What are the details of this partnership?
So NVIDIA holds a small stake, about 0.3%, but the strategic partnership is the key takeaway here.
Okay.
They're working together to bring AI infrastructure to small and medium businesses,
Okay.
which is a growing segment of the market.
Interesting. So expanding beyond just the large players is a smart move.
Yeah,
But let's talk about the heart of Nebius's business data centers.
absolutely.
Yeah.
Nebius's data center business is really viewed as its primary growth driver,
Yeah.
and they are aggressively expanding,
Right.
building new centers in the U.S. and Europe to meet that increasing demand for AI infrastructure.
Gotcha.
Their first U.S. data center is located in Kansas City,
Okay.
and that's expected to begin operations in the first quarter of 2025.
All right.
They're also planning a 25-megawatt facility in Finland, one in France, and potentially 2 more in Europe.
So why Kansas City?
Yeah.
It's not exactly known as a tech hub.
Well, they chose Kansas City strategically
Okay.
for its lower land and energy costs.
Right.
And it's actually got a developing tech ecosystem
Okay.
that has attracted universities and a growing pool of skilled workers.
Interesting. So what sets Nebius's data centers apart in this crowded market?
Well, they are positioning themselves to cater to a wide range of clients,
Okay.
from large enterprises to smaller companies, and those with specialized AI needs.
All right.
So this means they're not just renting out GPUs.
Oh, so they're offering more than just raw computing power.
Yes, Nebius aims to provide a full range of services, from GPU rentals and AI software to customized solutions.
Wow.
So this full stack approach
Okay.
could give them an edge over simple GPU rental providers.
Interesting.
And the investor on Reddit is particularly interested in Nebius's potential in this area.
Okay, that's a good point.
Yeah.
This Reddit investor seemed to have some interesting insights. What are some of their key observations?
Well, he believes Nebius is operating in a high-growth market, but he also has some concerns about their valuation.
Okay.
For example, Nebius is currently trading at a market cap of $10.4 billion,
Right.
which places it at a price-to-sales multiple of 20 to 25 times its projected 2025 revenue.
That seems pretty high.
Yeah, especially when compared to a major competitor like CoreWeave.
Okay.
CoreWeave is estimated to trade at a multiple of 4 to 9 times sales.
Why such a big difference?
Yeah.
Is CoreWeave doing something drastically different?
Well, they're both NVIDIA partners and have a significant presence in the data center market. But the investor on Reddit believes Nebius's valuation might be inflated due to market hype.
Sounds like he's got some reason to be cautious.
Yeah.
What's his outlook on Nebius's revenue?
He predicts that Nebius's 2025 revenue will likely land somewhere between $400 and $500 million.
Okay.
And this is significantly lower than Nebius's projected annual recurring revenue, or ARR run rate, of $750 million to $1 billion for 2025.
Okay, so there's a considerable gap between their projections and this investor's estimates.
Yeah.
What are some of his other concerns?
Well, he's worried about future pricing pressure in the data center market.
Okay.
As competition intensifies, Nebius needs to ensure it can generate enough cash to fuel their aggressive expansion, which he estimates will cost them between $2.5 and $3 billion in both 2025 and 2026.
It's a classic spend money to make money situation.
Exactly.
Wow.
But the scale of spending, coupled with that potential pricing pressure, definitely raises some flags.
Right.
He's particularly concerned about Nebius needing additional capital and the resulting dilution for existing shareholders.
Oh, okay.
They currently have about $2.9 billion in cash on hand,
Right.
but that might not be enough. He also points out that Nebius might consider selling stakes in their other business segments,
Okay.
like Toloka 1010 ClickHouse and AV Ride, to fund this expansion.
So a lot is riding on the success of their data center business.
Yeah.
It sounds like he's not completely writing them off, though.
You're right. He acknowledges that Nebius is in a high-growth market with substantial potential,
Okay.
but he's clearly concerned about the current valuation and the potential risks.
So what's his strategy given all of this?
He's taking a cautious approach, recommending selling 25 to 50% of Nebius shares before their upcoming earnings report on February 20th. He wants to lock in some profit just in case the results disappoint and the stock takes a hit. But he's holding on to the remaining shares for the long term, betting on Nebius' potential in the AI market.
It's a smart way to manage risk while maintaining exposure to potential upside. But are other investors sharing his concerns?
There are definitely differing opinions. Some investors in the comments section of that Reddit post argue that Nebius has advantages that CoreWeave doesn't.
Oh, okay.
They point to Nebius' team of specialized engineers and their focus on customized AI solutions as key differentiators.
So they believe Nebius is offering more than just raw computing power.
Yeah.
They're providing a higher level of service and expertise that justifies a premium price.
Exactly. They see Nebius as well-positioned to capitalize on the growing demand for sophisticated AI infrastructure as models become more complex and require specialized hardware and software.
It's a bet on Nebius becoming the go-to provider for cutting-edge AI development.
Yeah.
But let's go back to those data centers for a moment. What's inside these facilities that makes them so important?
At their core, Nebius's data centers provide access to the powerful computing resources necessary for developing and running AI applications.
Okay.
They're packed with GPUs, the specialized chips that power AI, and are in extremely high demand.
So they're like gyms for AI filled with specialized equipment. Instead of treadmills, they have GPUs.
That's a great analogy. And like a gym, Nebius offers different levels of access.
Sure.
Companies can rent access to Nebius's GPUs on a pay-as-you-go model.
All right.
This is attractive for companies with occasional spikes in demand.
Makes sense. But you mentioned earlier that they also offer a platform as a service, or PaaS. What does that entail?
This is where Nebius provides a more managed and integrated environment for AI development.
Okay.
Their PaaS, which includes their AI Studio, gives clients access to pre-trained AI models, tools for data management, and support for different programming languages and frameworks.
It sounds like it streamlines the development process and lowers the barrier to entry for AI innovation.
That's the idea. It's a comprehensive offering aimed at making AI development more accessible, especially for companies that lack the resources to build their own infrastructure.
The Reddit investor also brought up an interesting point about the potential for fragmentation in the AI data center industry. What do you mean by that?
He's suggesting that over time, the needs of AI developers will become more diverse and specialized.
Okay.
Instead of one-size-fits-all solutions, we'll see more customized and niche offerings.
So instead of just needing raw computing power companies, we'll be looking for data centers optimized for their specific AI workloads.
Precisely, he believes that as AI applications become more sophisticated and tailored to specific industries, the demand for customized AI infrastructure will increase.
That makes sense. Does he see this trend as positive or negative for Nebius?
He sees it as both a challenge and an opportunity. It means Nebius can't just be a generic GPU provider. They need to adapt and provide specialized solutions to meet these evolving demands.
So it's a race to stay ahead of the curve.
It is, and that's where their focus on a full-stack offering, including software and customized solutions, could give them an edge.
They're trying to position themselves as more than just a hardware provider, becoming the partner that helps companies build and deploy the specific AI solutions they need.
Exactly, but the question remains, can they execute on these goals and live up to their valuation?
Well, that's the billion-dollar question. And to get a better sense of that, let's look closer at those potential challenges facing Nebius, starting with the pricing pressure you mentioned.
He's concerned that as more players enter the AI data center market, competition will intensify, potentially driving down prices for GPU rentals and other services.
So it's a classic supply and demand issue.
Yes, as more data centers come online, the price of computing power could drop, squeezing Nebius's profit margins.
So does he think it will become a race to the bottom where the lowest price wins?
Not necessarily. He thinks Nebius can differentiate itself by offering specialized solutions and a higher level of service that companies will be willing to pay a premium for. But it remains to be seen if that premium will be enough to offset potential pricing pressure in the broader market.
Okay, so pricing is a key factor to watch. What about the massive capital expenditures they need to make?
Building and operating data centers is incredibly expensive. Nebius is pouring billions of dollars into expanding their infrastructure. But the Reddit investor is concerned about their ability to generate enough revenue to cover these expenses.
So there's a risk that they might have to raise more capital and dilute existing shareholders.
Precisely, and that's why he's focusing on their ability to generate cash flow from their data center business.
It all comes down to proving that their spending is justified by strong revenue growth. But the investor also mentioned Nebius potentially selling off stakes in their other businesses to fund this expansion.
Right. He speculates that if the data center business doesn't generate enough cash, they might be forced to divest some of their non-core assets to raise capital. It highlights the pressure Nebius is under to make this data center expansion successful.
Okay, so a lot is riding on those upcoming earnings.
Absolutely. They will give investors a much clearer picture of Nebius's financial health and their ability to execute their plans.
Let's switch gears for a moment and talk about the data centers themselves. What can you tell us about the specific locations and capacity of these facilities?
Their Kansas City facility is designed to be a flagship location and can scale up to 40 megawatts.
Wow.
This indicates their confidence in that region's long-term potential. Their European data centers are also significant, with the one in Finland planned for 25 megawatts.
And how do those megawatt numbers translate to actual computing power?
Megawatts refer to the power capacity of these data centers.
Okay.
The higher the megawatt capacity, the more computing power they can house. Essentially, it's a measure of how much AI muscle they can pack into these facilities.
So what kind of hardware are they using to achieve that?
The Reddit investor speculates that most of their expansion will focus on NVIDIA's B200 GPUs.
NVIDIA's chips are considered top of the line for AI, so that makes sense.
Right.
But building these massive data centers is just one piece of the puzzle, right? What else is Nebius doing to attract clients and stay ahead of the competition?
They're emphasizing their full-stack approach, aiming to provide more than just hardware.
Oh, yeah.
Their offerings include a suite of services designed to support the entire AI development lifecycle.
It sounds like they're trying to be a one-stop shop for all things AI.
That's one way to put it. They're aiming to provide the infrastructure, the platform, and the expertise to help companies build, train, deploy, and manage their AI applications.
So break that down for us. What does this full-stack offering actually entail?
It all starts with the hardware. They provide access to high-performance GPUs, which are essential for training and running complex AI models.
That's the foundation, the computing power, but what else is included in this stack?
Beyond the hardware, they offer a platform. This includes their AI Studio, which provides tools and resources for data management, model training, and deployment. They also offer pre-trained AI models, which can be a great starting point for companies that don't want to build everything from scratch.
So it's like a toolkit for AI developers with pre-built components and models ready to go.
Exactly. And they also provide support for various programming languages and frameworks so developers can use the tools they're most comfortable with.
So it's a flexible platform that caters to different needs and preferences. What about the software side of things?
Nebius develops its own AI software as well. This software can be integrated into their platform or offered as standalone solutions.
What kind of software are they developing?
They're working on software for optimizing AI workloads, improving data management, and enhancing the performance of AI models.
So they're trying to create a competitive edge by developing software that works seamlessly with their hardware and platform.
Precisely. They're aiming to create a fully integrated ecosystem that simplifies and streamlines AI development and deployment.
Okay, so they're building this comprehensive AI ecosystem. But earlier we talked about the investors' concerns about fragmentation in the industry. How does Nebius's approach address that?
He believes that fragmentation, the increasing specialization of AI needs, could actually benefit Nebius.
How so? Wouldn't that make it harder to create a one-size-fits-all solution?
Possibly. But he argues that Nebius's full-stack approach, combined with their focus on customized solutions, puts them in a good position to adapt to those evolving demands.
So instead of trying to be everything to everyone, they can focus on becoming the go-to provider for specific niches or industries.
That's exactly it. He thinks Nebius can leverage their expertise and their platform's flexibility to create tailored solutions for companies with unique AI needs.
Like a bespoke tailor for AI solutions.
Yeah.
That's a great way to put it. Can you give us some examples of how they might tailor their offerings to different industries?
Absolutely. Let's look at healthcare. Nebius could offer customized solutions for healthcare providers looking to implement AI-powered diagnostic tools or drug discovery platforms.
So instead of just providing the computing power, they can offer a platform preloaded with healthcare-specific data sets, models, and tools.
Exactly. They could also provide expertise in navigating healthcare regulations and ensuring data privacy and security.
A complete package specifically designed for the healthcare industry that makes a lot of sense. It seems like they're covering all the bases.
They are trying to, but the Reddit investor also pointed out another important trend, the push to lower AI training costs.
Right. Even though demand is high, now there's a constant drive to make AI training more efficient and affordable. Does he think that could pose a problem for Nebius?
He does see it as a potential risk. He believes Nebius needs to constantly innovate, to stay ahead of the curve and find ways to offer value beyond just raw computing power.
So they can't just rely on having the most powerful hardware they need to be the most efficient, cost-effective, and user-friendly solution as well.
Exactly. He believes their success hinges on finding that balance.
We've covered a lot of ground today. We've talked about Nebius's origins, their partnership with NVIDIA, their aggressive expansion plans, their full-stack approach, and the potential challenges they face.
It's a complex but fascinating company with a lot of potential.
It really is, but
Yeah.
ultimately it comes down to whether they can deliver on their promises.
And for that, we need to wait for those upcoming earnings. Those numbers will give us a much clearer picture of their financial performance and their ability to execute.
Okay, so a lot is riding on those earnings. Any final thoughts for investors who are considering Nebius?
Nebius is a high-growth company in a rapidly changing market. They have a compelling story, a strong team, and ambitious players, but they also face intense competition, potential pricing pressure, and the need for significant capital expenditures.
It's crucial for investors to carefully weigh the risks and rewards before making a decision.
I completely agree. Do your own research, stay informed, and make the decision that's right for you.
Thanks for joining us on the Deep Dive today. We hope this deep dive has provided you with valuable insights to guide your investment strategy.
As always, we encourage you to continue your research and stay up to date on the latest developments in the AI industry.
Until next time, happy investing.